Everyone. Thanks again for joining today's session. This is now the sixth and the final event for the time being in a series of monthly structured CPD webinars with Scottish Widows. Now, as you may know, I am the Scottish Widows Business Development Manager for the Julian Harris Network, and I cover the Scottish Widows platform, the retirement account, annuities, and protection. So if you do need any help or assistance on any of these products, then please do reach out to me and I'd be happy to help. Today's session is entitled Medical Underwriting and How to Secure the Best Terms for Your Clients. And this will be run by our very own Scottish Widows Protection Specialist, Jonathan Hall. You'll all receive 1 hour of structured CPD for joining today, and I'll email over your certificates after the session. Historically, the underwriting of protection cases has been viewed as a black box into which advisors would submit cases and hope for the right outcome. Now, things have moved on from this view, and in this session, we'll aim to demonstrate the transparency shown by insurers by giving an understanding of what happens when a case is submitted. We'll also examine how some common medical conditions are underwritten before sharing some market data and real-life case studies to highlight the customer-focused approach we take at Scottish Widows. Now, before we start, just a bit of housekeeping. I would appreciate it if you could all go onto mute while Johnny's presenting, but if you do have any questions, then please feel free to raise a hand during the session or place your questions in the chat function and we'll pick them up as we go along. So without further delay, I shall hand you over to Jonathan.
Brilliant. Thanks for that, Simon. And good morning, everyone. Thank you very much for dialing into the session to hear us have this sort of underwriting discussion this morning. And welcome back if you've joined one of the previous sessions that Simon's organised that I've helped run for the Julian Harris Network. So as advertised, we are going to be discussing underwriting this morning. It is an area, in my opinion, where providers and insurers have a great opportunity to differentiate themselves and really support advisors in delivering for their clients. It really is the first moment of truth in the life cycle of a protection case. Can you make sure that your client gets the most competitive acceptance terms on the market? And that's one of the sort of themes that we're going to pick up through this session today. So we're going to look into a few different areas of underwriting. We're going to hopefully break down some possible misconceptions or sort of previous views about how sort of opaque underwriting has become, and we'll sort of look at ways in which the industry is moving forwards in that, as well as picking up a few of the hot topics as well along the way. So we're going to have, first of all, look at the underwriting process and look at exactly what insurers do and why do they do it in terms of assessing your client's case to be able to deliver an outcome. Now, we'll also have a look, and this is sort of very timely information, at some of the most common conditions, the things which we see most frequently disclosed on new business applications, and how those are viewed and how those are treated in the market and where the areas of development are in that area. We'll also talk a little bit about some of the pre-underwriting tools that are available across the market. There are some which are provider specific, which we'll mention, but there are now a wealth of third-party, very powerful comparison underwriting tools and services that will signpost for you as well, so you can see what's available to help make that process easier on yourself. And finally, we'll have a look at some case studies. We've pulled together some real life examples of cases that we've had across our desk at Scottish Widows, cases that historically may have been very difficult for the industry to underwrite, and ones and areas in which we continue to deliver better than average outcomes, and we'll sort of come on to that as we get through. So first of all, then, to speak to the underwriting process. Now, of course, I can only describe in detail our process at Scottish Widows, but there are, of course, a lot of similarities and a lot of areas of crossover with what other insurers are doing in the market. Now, all insurers have an interactive online system designed to provide an instant outcome in the highest number of cases possible. And as an insurer, we're no different. We have an interactive underwriting system that we call the Scottish Widows Extranet, and that gives an instant outcome in just over 70% of cases. That's the black line you can see on this bar chart on the screen at the moment. Now, of course, what we're really interested in for the purpose of this session is what happens to those cases that get referred in for manual underwriting. Where can providers differentiate themselves in that area? And that's what we'll pick up next. Worth pointing out that, this sort of instant underwriting is, a common area of development across different insurers. All insurers want the ability to get cases instantly underwritten so that advisors can go straight back to their clients. And also we don't then have to engage in a lengthier process in terms of assessing that case. So currently we offer that instant outcome in about 72% of cases, as you can see here. And we're currently in the process of rolling out a new online system that will be with you later on this year. And we're expecting that, with all the improvements to the underwriting rules that we've built into that, for that figure to creep up a little bit higher so we can get more cases back to you straight away. Now, of course, what we're really interested in for this morning's session is what happens to that sort of 27% of cases that get referred in for manual underwriting. What happens then? Because these are the cases where historically, as Simon mentioned, have been viewed as a bit of a black box, that actually those cases go into an insurer and it's quite opaque what happens to them, and it can be quite frustrating for you as the advisor in terms of managing that and managing your client's expectation. Now, as an insurer, we've always been advocates of transparency in underwriting, and I hope that will come through in some of the things that we'll discuss this morning. So what we'll do now is we'll follow the story of a case, the journey of a case, what happens when it lands with us in our underwriting department. Now, it will initially land with one of our medical underwriters, and they're effectively the hub in the wheel, and that's what I've tried to show here with this little diagram. They are the person who will coordinate all of the other underwriting resources that we have available to us to make sure that we are offering a fair decision, a fair outcome on your client's application. Now, there's a few of resources that our underwriters can draw on that are worth calling out in particular. Shown there in the blue on the screen, first of all, is our senior underwriting team. Now, we're very lucky to have probably one of the most experienced senior underwriting teams currently operating in the UK protection market. And we further enhanced that last year when you're well aware that Aegon unexpectedly departed from the UK protection market. We were able to bring on board 5 of their senior underwriting team, and we've been able to sort of further develop that resource and keep that expertise in the industry. Now, the second element of this, which is worth calling out, is our underwriting strategy team. Underwriting is a moving feast. It's something which is continually evolving, and it's really important that we do that as an insurer to make sure that we act in a way that reflects the needs and demands of the public and the general public health picture. We've been offering life insurance or assurance of some form continuously since 1815, and if we were still underwriting in the same way now as we did then, we probably wouldn't be offering terms to many people. So it's really important that underwriting continues to move with the time, and that's the team which focuses on that, have access to a vast amount of data from across the market and the wider public health picture to make sure that we're continually making incremental improvements to move with the times. And that's something we'll pick up a little bit later on when we talk about one health disclosure in particular. Now, in terms of the process that's followed when a case of yours lands with us here at Scottish Widows, our philosophy is always geared around trying to get an outcome delivered as quickly as possible with the minimal amount of additional evidence. Now, that is, of course, easier said than done in some cases. There will always be times where additional evidence is required, but there are a few things that the industry is doing to make that more painless than it has been historically. Back to the start of this, though, and if a case gets referred into us for further underwriting, we'll first of all have a manual assessment of the information that's been presented on that application, because there may well be times where it's a complicated combination of disclosures, or it may be that it was bits of information that the system wasn't able to make a decision on. So rather than us just saying computer says no, that'll get referred in so that our underwriters can have a look. And in a lot of times, by making that manual assessment of the application, we can actually come back to you with terms just by having a human look at the application. Now, there may be times where there might be some detail that is missing, or there may be a couple of supplementary questions, further details that might be required. And at this point, what we'll look to do is something that we call little t underwriting. It's not full tele underwriting where we complete the whole application, but we will contact the client and speak to them directly, let them tell their story if there are a couple of additional details that we need. Now, we'll always try and come to the advisor first. You may have that additional information noted on your fact find or somewhere in your client file, and there wasn't a box for it on the application. So we'll come to you first. But if you've not got that info, then what we'll do is our underwriter can pick up the phone to the client, ask them a couple of questions, get them to describe the situation in their own words, and we can use that information to get the underwriting then completed. Now, all being well, if you were to submit an application to us one morning, that could get referred in, and our underwriter could then be on the phone to your client that same afternoon to get those additional details, provided you've supplied us with the client's contact details. So a really powerful reason for the importance of that. Now, of course, there will always be some cases where the complexity of the disclosure or the length of history might require that we need some additional evidence. And that will, of course, be in the form of a GP report or a medical exam, which is by far our preferred means of collecting that medical evidence. If the client can undergo a medical exam, if that will let us get the information we need, that turns into a booking that the client can make a time and a date that suits them for a private nurse to visit them at home or at work. 15-minute appointment, some basic measurements and observations get taken, and a questionnaire gets filled out. That gets sent back to us, and that means then we receive that information very quickly, usually within 24 hours of that appointment taking place, possibly a little bit longer if a blood test is required, but it means that we can get that information back very quickly. Now, GP reports are, in my opinion, best described as a necessary evil. They're not something which is going away, but they are something which providers are using increasingly sparingly because of the time constraints and the sort of resource burden that is involved in assessing them. Now, currently, we only request a GP report in less than 1 in 10 cases. So we, as an insurer, we are doing what we can to underwrite around that GP report requirement. But sometimes we simply will need that level of information and we will have to go for it. Now, I'll tell you a bit in a moment about what the industry is doing to make that element of evidence gathering easier for everyone involved, and we'll come on to that in a couple of moments' time. Now, finally, if we're not able to make a definite decision based on that medical evidence that we've received, that's the point where we may need to involve one of our chief medical officers or one of our reinsurers. Now, we have 2 or 3 chief medical officers that we can call on depending on what type of case it is that we're dealing with. They're all leading medical practitioners in the UK, experts in their field, who can lend that medical perspective to help us understand that risk. Also, if we've got anything that's a particularly unusual risk, it's really important that we get our reinsurer's agreement for that particular policy to make sure that if a claim is made or when a claim is made, we've already got their agreement that it's a policy that we can accept and a risk that we can accept. Now, of course, we want to keep you updated at every point during this journey. You can see at the bottom of the screen there is sort of indicating that your advisor-facing dashboard will be updated at every point. You may have someone that looks at that. You may look at it yourself to track the progress of your cases. But we do also send emails at key milestones as well to make sure you're not left in the dark as to what is going on with the case. Now, I'll come back to GP reports because this is an area of underwriting which is the source of much frustration and much burden for almost everyone involved in the process. Now, most providers and certainly Scottish Widows have been pushing very hard for the adoption of an electronic GP report process in order to speed things up and make the process much more bearable and much easier for everybody involved. There's one system which has become the standard go-to system for all insurers in the industry. That's a system called iGPR, and it's a system which we are currently finding about 2/3 of GP surgeries are signed up to use. So we are able to use this quite widely because the majority of GP surgeries are engaging with this process. Now, in terms of how it works, well, if we receive an application and it's determined a GP report is required, we will first of all check to see if we've got the client's mobile number and their email address. If we have both of those things, we can send them the AMRA consent form electronically, which means the client simply needs to read, click to sign, and that'll bounce straight back to us the moment they've signed it. So it's a very quick and efficient way of getting that consent. We're actually going to be improving that part in the process quite significantly with this new online system that we're currently deploying, because that will capture the AMRA consent at the start of every application, as a lot of other providers currently do. So that means that every case you submit to us comes with that consent already done. So we'll be removing another step from that process once that system is fully deployed. Now, once we've got that AMRA consent, what we'll first of all do then is go onto the iGPR system. And the iGPR system is effectively a two-way portal that allows insurers and GP surgeries to communicate. It facilitates the invoicing and all the payment. It's a complete wraparound service to facilitate a GP report. Now, what we'll do is we'll have a look and see if the surgery in question is registered on the system. If they are, we can send them the request, and that request will land instantly with the GP surgery. We can see that they've opened it and actioned it, so it's much easier for us to track as an insurer. And if the GP surgery has digitized patient records, as many and an increasing number do, then all they need to do is drag and drop that file into the iGPR system, and that will go straight back to us as the insurer. So this process, this system turns potentially hours of paperwork in collating and sending a paper GP report into a few minutes of desk work at the computer for whoever in the GP surgery is tasked with doing this. We do still pay a fee for this, a slightly reduced fee, but we do still pay the surgery for their time to do this. So it is much more efficient use of their time for them, and slightly more lucrative as well, if that's what they're interested in. Now, another advantage of this iGPR system is it allows insurers to request a full GP report, the client's entire medical history, as noted by the GP, or we can request a targeted report. Now, that's really beneficial because in certain cases, such as clients with diabetes, for example, we may only need information from the GP related to their diabetes. So we can specifically request that, and the GP can supply only what's required. And again, that reduces the time involved for everyone. Now, the real highlight and the real selling point for this process and this system is the turnaround time. We're currently finding that the average turnaround time for an entirely paper-based GP report is around 8 or 9 weeks. So it is an extremely lengthy process if the surgery insists that everything is done on paper. However, with this iGPR system, the majority of reports, almost 60%, as you can see there, get returned to the insurer within 14 days of the request being sent. So it's a far quicker experience, means we can get that case underwritten and turned around much more quickly. And it means that we're not in that frustrating spot of GP surgeries needing to be nudged and chased in order for us to actually get the information back. We often get asked about how much do you pay for a GP report. So in the interest of transparency, I thought I'd share that with you as well. The average cost at the moment for a fully paper-based GP report is about £125. We pay £80 for an electronic report to reflect the fact that it's far less work involved for the surgery, but it's worth pointing out that there really aren't any regulations around what a surgery can charge for a GP report. Although the AMRA consent is highly regulated and legislated, the actual fee that a GP surgery can charge effectively has no ceiling. And there's one surgery, Harley Street Doctor in London, who invoiced us over £900 for a GP report a couple of years ago. So there really is, it's a little bit lawless in that regard. And unfortunately, insurers will have to cough up for it because we need that information. Another development as well, something we're working on within Scottish Widows to, again, make the GP report process even better, is we're exploring ways in which we might be able to use AI, artificial intelligence, to assess the information we get back from a GP. Now, increasingly, we're finding that GP reports are much longer and wordier than they have been in the past. Thankfully, our underwriters don't have to decipher doctors' handwriting anymore because all the notes are computerized, but we are seeing that the volume of information we get is much increased. We actually had a GP report land with our underwriting team in March this year that was 320 pages long. Now, that means that an underwriter has to sit and go through all 320 pages to make sure that we've taken all the relevant information and everything into account. So we're currently exploring ways that we might be able to use an AI to assess the GP reports, to then filter the information, to present to our human underwriters the key facts, the relevant information, so that we're not needing to use our underwriting resource to spend days on end going through one GP report. So we're trying to make that slightly more efficient there as well. Now, moving away from GP reports and sort of moving on to the actual outcome that is offered, this is likely to be revision for most of you on the call, but worth covering to make sure we're all coming from the same direction. The optimum outcome, of course, is standard rates. That's what we'd hope for all of our clients. But of course, there will always be cases where the insurer may need to apply an exclusion. They're not able to insure your client for one particular thing, or there may well be a rating or a loading in order to account for the cost of an additional risk. Now, in almost all cases, ratings are applied on a percentage basis. So that means a 50% or 100% loading is applied to the premium. And that is very easy to understand, very easy for the client to understand as well. But there are cases where insurers may need to deviate from that and to offer a per mil loading. Now, this is something which I know for a fact clients have a number of misconceptions about. In my own experience offering protection advice, I came across one client who was subject to a per mil loading, and he thought that was due to the amount of business mileage that he was doing, and that was the reason for the loading. He maybe misconstrued the meaning of per mil. Per mil loadings are only used by insurers in the sort of highest risk circumstances. So we may be talking about somebody who has very recently suffered with cancer, somebody who engages in very high risk hobbies and pursuits, those types of things. And what we'll effectively do is we will apply an extra premium for every £1,000 of cover that the client is taking out. So if we apply a rating of £1 per mil and the client has £100,000 of cover, what we'll do is we'll add an additional £100 on, £1 for every 1,000. That gets added on to the annual premium and then obviously divided down by 12 into the monthly premium, that, which is how your client will think about it. Now, that per mil loading is likely not to be the only price increase if that does apply, because that is pure risk premium. That doesn't account for any extra commission that will be due following that, which most advisors in practice may choose to sacrifice. But that may not be the, it might not be as cut and dried as that example that I've just given is the point I'm trying to make. Now, finally, and in the very smallest amount of cases, the insurer may need to postpone or decline. Worth pointing out that the most common reason that an insurer would postpone a case is because a client is either awaiting a test or they are currently undergoing some kind of medical investigations. So if you've got a client in that situation, it may well be best to wait until that's concluded rather than forcing an application through it for it to get postponed. It may save you a bit of a headache in that case. And finally, onto the declines. With us, that is only about 3% in total of all the cases we get. So it's a very, very small percentage. But sadly, there are some risks which are just, outside of our appetite that we are just simply not able to cover. Now, it's worth pointing out that, this is not necessarily a uniform picture across the market, that there is a massive discrepancy in insurers' philosophies towards different things and in their journeys and processes that they will use to assess an individual. Now, this was sort of quite well encapsulated in this particular story, which was in the Telegraph. Now, this is going back a few years now to 2018. And the reason we talk about this is that this lady actually ended up becoming a Scottish Widows client, and she gave us permission to sort of share her case as a case study sort of to showcase really just how much of a patchwork picture the market is in terms of the outcomes that are available. Now, this particular lady called Melanie wrote her story and it went into the Telegraph. She was trying to obtain some cover and had to make a mental health disclosure on the application. Now, Melanie found herself in this situation through no fault of her own. She was 41 years old. She was not somebody who was predisposed to suffering poor mental health, but there'd been a traumatic trigger event in her life which had necessitated her engagement with some mental health support. What had happened is that her mother was killed in a road accident that was caused by a drug driver. And following that, there was quite a lengthy trial to ensure that justice was brought about. And Melanie had the financial resources to be able to pay out of her own pocket for private trauma psychology support to make sure that her mental health was safeguarded as best as it could be while that trial was going on. Now, around that time as well, Melanie also found herself needing to move house, and she was in the process, through her mortgage advisor, of applying for a new life and critical illness policy. Now, because Melanie was currently under the care of a trauma psychologist, she found it very difficult to arrange that cover, and her advisor found the door being shut in their face sort of across the market. Declines were quite a common outcome at that time for this type of disclosure, and where terms were available, the advisor found that they came with 50 or 100% loading. So there were, quite heavy loading there. Now, the advisor and the client felt that probably wasn't a particularly fair outcome, because this isn't an individual that's predisposed to suffering poor mental health. And actually, they're doing something which is proactive in safeguarding their long-term mental health by supporting themselves through this trial. So eventually this application came to us at Scottish Widows. The advisor had a conversation with our underwriters before submitting it to make sure that they had the confidence that we'd be able to underwrite this fairly and offer terms. We actually went on to offer standard rates on this particular case, and Melanie's cover is still on risk with us here at Scottish Widows because we were able to offer that standard rates outcome. Now, we were able to do that because we engaged that little T underwriting. We spoke to Melanie on the phone directly to an underwriter. She was able to tell her story, explain the circumstance, and we were able to take all of that into account and make sure we treated her fairly as an individual, rather than applying a blanket rule that says if she's under this kind of support, then she needs a heavy loading, or we may not be able to offer terms. Now, this was a case study back from 2018, and the reason that we still mention it today is that mental health and the underwriting of mental health is probably the most significant challenge that we're facing into as an industry. One of the biggest hurdles that insurers will have to clear in the coming years. So we'll have a look at some of the most common conditions and how they're underwritten. And I'm going to sort of pick that mental health thread up straight away again, simply because, and you may not be surprised to learn this, it is now the most frequently disclosed condition on new business applications. What you're looking at here is a snapshot of our disclosure rates from January this year, but we see these very same picture being replicated across different insurers, across different reinsurers, and all the panels of firms they look after. Mental health is firmly planted now as the leading cause of disclosure on a new business application. The rest of the top 10 are things that have been there in various different orders for the last 15 years or so, a few basis points either way, but broadly the same order. Mental health about 8 years ago wasn't even in the top 10, and it's been on the rise and has now firmly planted itself there at the top. Now, most public health experts would probably agree that mental health in the UK is the biggest health crisis or health challenge that we face into as a country now that the pandemic is a few years behind us. So it's really important, as an industry, that we look to understand this in the best way that we can to make sure that we are underwriting people who need to make a mental health disclosure in the fairest possible way. Now, that historically hasn't been the case, and there are many people who've needed to disclose a mental health condition in the past to an insurer and have probably been underwritten very harshly as a result. Just to give you a bit more background to that, this is the top 5 disclosures plotted against time along the bottom of the chart there. This goes back to January 2021. But if we were to wind the clock back even further on this chart, that dark line at the top, which represents the mental health disclosure rate, would peak and trough quite dramatically and almost exactly in line with the tightening and loosening of lockdown restrictions during the pandemic. Unsurprisingly, the experience of living through that and being a lot of people being told to stay at home, to isolate, to cut down social contact and keep themselves to themselves has unsurprisingly had a profound impact on the mental health of the UK at large. We're also seeing as well that this disclosure rate, and you can see it sort of hovers at even over 25% at some periods here, is starting to reflect the stats that we've seen from charities such as Mind, that 1 in 4 adults in the UK in any given year will suffer a mental health condition. The fact that we're seeing 20-25% disclosure rate on this means that we're starting now to see that reflected in the disclosures that clients need to make on their applications. So what are we doing about that? And that is sort of where we're going to next with this, really. We noticed this mental health trend emerging around about 2018, about the time of that case for Melanie that we were able to do. And we realized that the industry generally had a very poor understanding of mental health, and for that reason wasn't able to underwrite it as fairly as it probably could. So at that time, we engaged the support of a charity called Mental Health UK. The sort of remit of that was, first of all, to help us as an insurer to better understand mental health and how it affects people, but also to provide us with guidance on how we can improve our underwriting rules, questions, and philosophy to make sure that we give the best possible outcome to as many people with mental health as possible. Now, that approach is starting to pay dividends now, because this is now the most frequent disclosure, and hopefully you'll agree with some of the stats I've got here, and we're confident to say that as such as well, that we are the leading provider when it comes to underwriting mental health on a life or critical illness application. Now, one of the misconceptions that we learned that the public has around mental health is that if they disclose information, that would mean they can't get any cover. Well, actually, as a result of this project we've done with Mental Health UK, we now offer terms of some description to 96% of people who apply to us and disclose a mental health condition. So there's only a very small number of people, the most extreme, most severe cases, where we need to postpone or decline them for mental health. Now, we also learned that people were very worried that their past and things that happened to them years ago would come back to haunt their application and would possibly mean that they were assessed on the basis of things that happened a long time ago. So one of the things that Mental Health UK helped us to do was to completely rewrite our mental health question set. And now all of our questions, apart from one, are time bound. And really, we're only asking about the last 5 years of a client's mental health on any application. So that means if you've got an individual who perhaps suffered a mental health episode when they first moved away from home and went to university, which is quite a common occurrence, if they're applying for cover in 10, 15 years' time when you're seeing them now as a client, it's highly unlikely that they'd even need to disclose that on an application with Scottish Widows, because we've time bound the questions. We're not interested in the client giving us their entire mental health life story, because actually it's their recent history that will help us assess whether or not they pose any additional risk versus the average person on the street. Now, as a result of that, we're now able to offer standard rates to 82% of people who disclose a mental health condition to us. And that is why we're very confident in saying that we are the leading provider when it comes to underwriting mental health for life and CI, because there are no other providers that we're aware of that will offer standard rates to more people when it comes to mental health. So there's lots of things that we've done that allow us to sort of get into that position. And as I said, the industry is very much a patchwork picture. There are other insurers who are embarking on the same journey that we've been on to better understand mental health, to deliver better outcomes. But we were one of the first to do that. And that's why we're in such a strong position with this at the moment. Now, outside of Scottish Widows, most insurers will ask for the same type of information when it comes to underwriting a mental health case. Usual sort of things: time off work, date last experience, symptoms, has there been any instances of self-harm or attempts on life, etc. But there's one detail that we will ask for that no other provider will give the client the opportunity to share. On our direct application, if you come straight to us, we will ask the client to tell us if they've engaged in any positive lifestyle changes in the last 12 months that help manage their condition. Now, no other insurer asks this question at the moment, but actually we're able to use this to let the client show us their green flags, because actually we know that lifestyle changes are hugely influential in people's long-term mental health. So if the client's able to tell us things like they've improved their diet and exercise, that if they've engaged with the counselling or therapy that their GP has recommended. It might be that they've changed jobs if they were suffering with work-related stress. Perhaps they've moved away from a damaging relationship that was impacting on their mental health. If they can tell us all things like that, we will take note of that information and we will use it to reduce their risk profile when it comes to mental health. That's why we're able to offer terms to so many people, and in a lot of cases that little extra nugget of information will allow us to reduce the loading, or even in some cases reduce the loading all the way down to offer a standard rates outcome. So certainly worth being aware of that. That's not available on Underwrite Me because that's an agreed and shared question set. That's only on our direct application, but it can make a big difference to people where they need to disclose a mental health condition. Now, some of the things that we'll send you as follow-up to this, if you want to look into the nuts and bolts of this a little bit more, we've got an underwriting fact sheet that will come via a link on your CPD certificate, and we've also got an underwriting outcome tool online as well that'll allow you to research some of the most commonly disclosed conditions. Worth pointing out at this point as well that you can also speak directly to our underwriters. If you call up our phone line and select option 2, then you'll speak directly to one of our medical underwriters. We always have a pool of them available to take your calls so that you can speak directly to an underwriter and make sure that you're getting the right information straight from the horse's mouth about how we will assess that case and what further information we might need. Now, moving away a little bit from the mental health picture and into another disclosure, which is on the rise, and that is diabetes. Now, the reason why this is quite a timely topic is that currently 1 in 10 adults over the age of 40 suffer with type 2 diabetes in the UK, and that number is expected to increase to around 2 or 3 in 10 by 2040, and that's only just over 15 years away. So we're not talking a massive timescale here. Now, most insurers will ask for similar information around diabetes, and you can see that there in the coloured boxes on the left-hand side. If you're able to supply all of that information to us on the application, then in about 90% of cases, we can give you a instant decision for the diabetic client. So if you're able to give us that HbA1c reading and there's no complications affecting the eyes, kidneys or nerves, in most cases, we'll give you an instant outcome. We've built a set of underwriting rules for diabetes that are very capable, which means that we can get those cases assessed straight away by the system. Now, diabetes is a good example of something which really illustrates the breadth of different outcomes available. On the right-hand side here, you can see this table, which is from our underwriting guide, which also will send you with the CPD certificate. But you can see here that there's the potential for ordinary rates for an older client with type 2 diabetes, all the way to plus 200% up to a decline for a younger client suffering with type 1. If you're able to supply us that blood sugar reading, that's the key to unlocking this, then we will do our very best to underwrite that client and give them the best possible outcome. Again, this is an area where the client's lifestyle factors play a big part. So we'll ask on the application about, are they engaging with their reviews? Have they improved their diet and exercise? And again, we'll take all that information into account when we're assessing them as a diabetic. One final thing to point out with diabetes, and again, this is because historically it was difficult to cover a diabetic for life and impossible to cover them for a critical illness policy, but things have now moved on and there are now several options in the market whereby you can obtain a critical illness policy for a type 2 diabetic. Not quite there for type 1 diabetics yet, but for type 2, it is possible to obtain cover. There's us and Zurich and HSBC who will be able to consider an application for such clients. And having looked at the criteria, I'm quite confident in saying that our criteria and our process is probably the most straightforward. So do bear us in mind if you have any cases like that. And of course, you can get in touch with Simon if you wanted to discuss one of those in a bit more detail. Now, I wouldn't be doing an underwriting presentation justice if I didn't mention the number one reason that clients get a loading, and that is BMI. Now, you've probably encountered many clients where their height and their weight has impacted the terms that an insurer is able to offer. I spoke to one advisor recently who said, I just happen to have lots of clients who are too short for their weight, and that affects the terms that they're able to obtain. Now, the reason I wanted to mention this is that actually this is something which can be headed off very early in the journey, very early in the process, and will completely mitigate the need for you to have a conversation with the client and explain to them that their policy has been rated because of their BMI. Now, wherever you source your business, whether that's through Iris, through iPipeline, or any of their products, Assure Web and Solution Builder and so on, or if you use Underwrite Me, you have the option of obtaining a partially underwritten quote whereby you can supply the client's height and weight alongside their date of birth and smoker status so that the quote returns you get from insurers have already factored that detail in. Now, because that's the number one cause of clients getting a rating, it's certainly worthwhile getting that information as early as you can, building it into the quote, making your recommendation on that basis, and then that removes that conversation further down the line, whereby you have to explain to the client that they've been subject to a rating because of their BMI, because you could recommend a quote that already has that priced in. So certainly worth exploring that. If you'd like to have a discussion about Underwrite Me and all the things that can do, then we're more than happy to support you with that as well. It's a third-party independent system to Scottish Widows. We're big advocates of it because it makes underwriting completely transparent and allows you to recommend the best provider on that basis. So we're happy to support you in getting started with that if you'd like to look at it in more detail. Now, the final area of underwriting that is worth mentioning and sort of worth calling out the variances across the market is what insurers are currently doing in the family history space. Now, this list of illnesses you can see on the screen here is a relatively standardized list of things that insurers will ask about. And in a lot of cases, if you need to disclose that an immediate family member has suffered one of these things, it may well have an impact on the underwriting. Now, one of these areas is worth calling out in particular is where you have a female client who has a family history of breast cancer. Now, for that individual, if they've seen that in their mother or in their sister, they're likely to hold that as their number one health concern. However, if they were to apply for a critical illness policy and they had to disclose that there was a family history of breast cancer, with almost every insurer in the market, they'd be subject to a breast cancer exclusion and maybe extended even to an ovarian cancer exclusion as well. Now, that doesn't seem like a particularly fair outcome. So what we've developed, and a couple of other insurers are starting to follow suit with this, is an alternative outcome for those cases, whereby we will still offer the full critical illness policy to a female client with a family history of breast cancer, but we'll apply a 50% loading. Now, what that means is that your client will still have the ability to make a claim for breast cancer under that policy. Now, we have had to apply a loading to reflect the fact that this individual does come with a higher risk because this is present in their family history. However, we do win a lot of business in this area because, for the simple reason that for these individuals, that is their number one health concern, and they want to make sure they can be covered for that. Now, this may not be the right solution for every client in that scenario because that plus 50 loading may well make this prohibitively expensive. But as an advisor, having this up your sleeve as another option to bring to the table, thinking about consumer duty and helping the client make an informed decision, this is a valuable option to bring to the table and certainly worth having a conversation with the client about as to whether or not that is something which they would be prepared to stretch to retain that full level of cover. Now, I mentioned before about us being prepared to offer standard rates to many more clients when it comes to mental health, but with that philosophy does extend to a number of different disclosures. What we're looking at here is some data that we've been supplied by Underwrite Me, and what we're comparing is the percentage of cases where we offered standard rates in the dark red brown bar versus the rest of the market as represented on Underwrite Me in the orange bar. Now, a couple of caveats to make with this. Underwrite Me does not represent the entire market. Aviva, Legal and General, and Zurich have not engaged with Underwrite Me and are not represented in this data for that reason. If I were a skeptical man, I would wonder why 3 providers have been reluctant to engage with a system that makes underwriting completely transparent. That's possibly a bit of food for thought for you to take away. But the rest of the market is represented on there, and as you can see here, in a range of different scenarios, we are far more capable to offer standard rates than most other providers. BMI is the exception in this data that we're looking at here. As you can see, you're slightly more likely to get that standard rates outcome with another provider. However, I will point out that these disclosures are only represented here in isolation. Where you've got BMI combined with other things which typically are disclosed alongside that, such as raised cholesterol or high blood pressure or mental health, quite often as well, sadly comes along with that as a disclosure, then we become far more competitive and more capable, because our philosophy is especially strong when it comes to assessing comorbidities or combination risks in terms of what clients might need to disclose. So certainly worth bearing that in mind. And if you've not had a look at Underwrite Me yet, I do highly recommend it. I've used it myself as an advisor in my previous role, and it saved me an immeasurable amount of time and allowed me to research 9 providers straight away, from a pre-underwriting point of view, and also to recommend a fully underwritten quote, so there's no surprises later on down the line. But again, we can help you get started with that if that's something you'd like to have a look at. Now, just to mention some of the pre-underwriting tools that we offer as a provider. Now, this interactive guide is something that we will send you as part of the follow-up to this session. It covers around about 15 or 18 of the most commonly disclosed conditions. It has underwriting case studies, but it also has information about the condition itself. So if you want to perhaps brush up on your knowledge about that particular condition, diagnosis rates across the population, prognosis outlook, all those types of things, all of that is contained within this guide. So you can have a very well-rounded look at the condition itself, how it's underwritten, what information we need, as well as some case studies of how that would be assessed as well. Now, I mentioned before that we have an interactive online tool. This is what our current version looks like, but you've probably heard me say a couple of times now that we are in the process of launching a new online system that will be coming to you later this year. That will bring with it a new underwriting tool that will be far more capable and far more powerful than what we offer at the moment. The limitation of our current online tool is that you can only disclose for research purposes one disclosure at a time, which isn't particularly helpful if you've got a client who's come to you with a shopping list of disclosures or multiple things you need to put in. The new tool is going to be powered by the same underwriting engine as the main application. So that means the new tool will let you research any number of disclosures and any combination of disclosures. So it'll let you get the same outcome you would as if you'd keyed it through to us as an application. So it will give you far more powerful research tools at your fingertips when that does come around. Now, for the final part of this session, I've cherry-picked a few case studies to share with you, a few which represent scenarios which historically have been very difficult for the market to underwrite, and cases in which our philosophy comes good and allows us to treat the client as an individual and make sure that we assess them fairly and offer them the very best outcome. Now, the first one that I'm going to share with you is a relatively extreme one, and it does concern an individual who's made an attempt on their own life. So just to give you fair warning of that, that's the case study we're going to have a look at first of all. Now, this is an area that historically would have been encountered with decline across the market for any individual who at any point has made an attempt on their own life. Now, thankfully, the industry has moved forwards, and arguably we've moved forward more than most in our understanding of mental health and the reasons why people may make an attempt on their own life. And that plays out in this particular case study. So this individual has quite a long history with mental health. Some 17 years ago, prior to them submitting their application, they were diagnosed with anxiety and depression, and at that time, sadly, took a deliberate overdose in an attempt to end their life. Now, winding the clock forwards, some 11 years prior to their application coming in, they had a further incidence of self-harming. Some 6 years ago, another relapse and a significant episode of anxiety and depression, which brought about suicidal ideation or suicidal thoughts. Some 3 years ago, the doctor was seen again due to panic attacks at the time, and an increase in medication was prescribed at that point. And that's sort of where the mental health history sort of, last significant event. 3 years down the line from that increase in medication, this individual applied for a life and CI policy with Scottish Widows. Now, this is a real case study that we had, a real case that landed with us at Scottish Widows. And again, this was an example where the advisor had been frustrated with other outcomes in the market, declines, very heavy ratings because of this individual's mental health history. Now, this was a case where we did decide to request a GP report simply because of the extensive history that this individual has with their mental health. Because actually, rather than speaking to the client and asking them to regurgitate all the details from 17 years ago, it was actually much fairer on the client for us to request a GP report, obtain the information from them, rather than ask the client to relive that and sort of regale us with all the details. So we requested a GP report. It confirmed everything the client had told us on the application. We noted that the attempt on life was more than 10 years ago, and that the mental health of this individual was currently under control and stable. Although their medication had increased 3 years ago, actually it had been stable and it had been steady ever since, and that change had helped them regain that stability in their mental health. So we actually were able to offer this case with just a 50% loading on the life and CI. Other insurers had offered per mil ratings and decline, so it was a far more competitive outcome than was generally available in the market. Because of the extensive nature of the mental health, we weren't able to offer the TPD cover, which is normally built in as standard with our CI product. So that was excluded, and the life and CI went out with a plus 50%, and the client was very, very pleased with that. And they'd come to their advisor in the expectation they would be uninsurable. So they were very pleased with this outcome that we were able to offer there as well. Now, just to share one more case study with you around diabetes. Again, it's another hot topic and something we've touched on in this session, just to sort of showcase exactly what is possible with the modern underwriting rules and systems that providers have deployed in the market. So here we've got a case of a male applicant who's currently age 40. He's applying for £100,000 of life cover, so a relatively small policy in the grand scheme of things. And this individual was diagnosed with type 2 diabetes some 5 years ago. Now, this individual is someone who has received a diabetic diagnosis, but he is a very good case, a textbook case of someone who might historically have been told that they were borderline diabetic, but now has actually received a diagnosis. This man is a non-smoker, is a BMI of 26, no associated cardiovascular risks that we need to worry about, and the advisor was able to supply his blood sugar reading of 55 millimole on the application. This individual's also attended the doctor at our diabetic clinic within the last 12 months. So that shows that he's engaging with the sort of looking after this condition. And he's also never been admitted to hospital with any complications. And crucially, he was able to tell us on the application no complications or damage to eyes or nerves or any abnormal urinalysis, protein in the urine, that type of thing. As I said, this is a very good case as far as a diabetic application would go, and it's certainly one where we're able to offer an instant decision. So no evidence was required at this. The case was accepted at the point of sale. It came with a small loading of 50% on this particular individual. There's potential for this person, if he were maybe 10 years down the line, that we'd offer this same case at standard rates if he'd had a longer history and more stability with the diabetes. But at the 5-year point, it did necessitate a 50% loading. However, that is far more acceptable than what would have historically been available for people in that situation. Even if we wind the clock back, just before the pandemic, sort of 6 or 7 years, the opening or minimum loading that most insurers would consider for diabetic was 100%. So there is some significantly better outcomes available for those individuals in the market now. Now that brings us up to the sort of the end of the session. So I'll just recap the sort of learning objectives content for you at the end here. So we've been through the underwriting process and we've had a look at that in practice with some of the most common conditions that we're currently seeing on new business applications. We've also mentioned about the underwriting tools as well, and I will mention Underwrite Me here again as well. If you take away just one thing from this session to go and have a look at, that should certainly be the thing to explore. And also we've had a look at some case studies there as well. Now there are far more case studies available in that in some of the documents that we'll send you as a part of the follow-up. And if you've got any particular cases that you'd like to discuss, Simon is available. I'm available to you as well. But of course, the best thing to do is to pick up the phone and speak directly to our underwriters, and they will give you the sort of honest truth about exactly what we can do and how we will do it for that particular case. That's everything from me. So thank you very much for your time this morning. I hope that was a useful session for you. We do appreciate you dialing in to sort of have these discussions with us. We've got a couple of minutes, so I don't know if any questions have come through in the chat or if anybody wants to offer a question sort of come off mute. Happy to do that. If not, you can always ask your follow-up questions to Simon and he can pass them on to me. That's hopefully stunned silence because with all that food for thought, and not that I've sent everyone to sleep. But if we've got no questions coming through for now, we'll look to wrap up the call there. Give you a little bit of time in the back to go and put the kettle on, which is certainly what I'm going to do next. But thank you very much for your time, everyone, in dialing in. We really do appreciate you joining these sessions. And if there's anything else that we can support you with, you can get in touch with Simon, and of course you've got access to me as a protection specialist as well. So I think we'll wrap the call up there, Simon, unless you want to add anything on the end.
Yeah, no, I just wanted to say thanks very much, John.
My pleasure.
Another great session. I just hope it's showcased to everyone the strengths in our underwriting team and the common sense approach that we take to underwriting. As John has mentioned, if you do have any cases where you'd like some pre-application guidance, then by all means contact me. Or you can contact the underwriting team directly, and they can give you some guidance on whether we can offer standard rates or whether there may be any particular loadings that may apply. Conscious that it's our last session that we've been running since January, and hope you found them useful. But as you may know, we are running a 45-minute general lunch and learn session for advisors this Friday, the 14th of June at 12:30, which John will be running. And this will be on our Scottish Widows protection proposition and our commitment to market. So we'd love for you to join, and I'll send details and a link again to register today. Just a quick one before we close up. I'd like to give you some exciting news. Scottish Widows are launching a new state-of-the-art protection quote and apply system very soon, as well as launching a brand new income protection offering. So watch this space, as there's lots more to come from us in the coming months, and we will of course keep you updated. So that's it from me. Just leaves me to say thank you all for joining this morning. Enjoy the rest of your day, and I shall speak to you again soon.
Thanks, Simon. Thanks, Jonathan.
Thanks, everyone.
Great
Cheers.
session. Thank you.
Thanks very much. Thank you. Bye-bye.
Bye-bye now. Bye.